Well, we called it. The Dow Jones closed up over 1,200 points, and look at mortgage rates. Mortgage rates went down over 0.5%. They went down over 0.5%, basically across the board. So if you're locked in, I'm going to show you guys how to reach out to us to get a lower rate based on today's rates. But I'm going to show you that at the end of the video. What's going on in the markets right now? Well, we see this. The Dow Jones is down a little bit, the S&P's up a little bit, and the NASDAQ is up a little bit. Well, we came off a 1,200 point day. Well, what was really the cause of a lot of this stuff from yesterday feeding into today's reports? Well, here it is. It's basically inflation numbers came in and they started to cool. And a lot of people are saying, well, you can't really high-five anybody because they've only cooled a little bit. Well, I'd rather have a little bit of a cooling than a lot of heating up. So let's really break down where the inflation is so we can figure out where it's going to go from here. So what we want to do is really break down these numbers. So CNBC did a great job for us today, and they actually broke it down right into here. But I have something to show you. You can see right through here. Here's the areas that had the biggest gains year over year. You can see food at work and at school. Would you have guessed that? I wouldn't have. But then you go down through here, it's a lot of food, and that's to the top of the heat. But then when we go down to housing is down through here, and it makes up about a third, a little over a third of the number. But you can see here, housing or shelter is still up 7% year over year. So until this number, one of the biggest components in the inflation numbers, really gets back down to 2 or 3%, the job isn't done, but at least we're on a good trajectory. And what this is saying is, Federal Reserve, the actions you're doing are starting to trickle in. Give it some time, because one of the biggest pieces of the puzzle as we see on the screen is shelter. Well, do you know the shelter components in here is about a month or 45 days lagging. So if you really get today's rental numbers, we all know the housing markets are starting to really come down, and rentals are starting to actually pivot and turn and starting to go down too. So when you have those two components coming down, and everybody's expecting those to come down dramatically, you're going to have shelter prices and shelter costs coming down in tandem. So that's even more good news for the markets and especially mortgage rates. But the one piece of the puzzle I wanted to show you guys too is the money supply. We really don't talk about money supply here on the channel, which we probably should, because money supply is basically the fuel for inflation. So if you go over to the money supply, you're going to see where it just spiked. Look at here. Here's where the money supply was basically for the last, I don't know how many years, 5, 6, 7, 8, 10 years. It goes through here and it's steadily increased. Okay, but then all of a sudden, look at this increase through here. This is when the Federal Reserve started, giving away money, and so did the federal government. So to give that money away, they don't have it to give because remember, we're in a deficit. So they have to print it. So this is how much money was created. Yes, created kind of out of thin air over the last 2 years. What the Federal Reserve is trying to do is put this back on this trajectory here, or actually even flatten it. Okay, so that's why they're doing what they're doing, is they're trying to pull all this excess money out of the equation. Okay, so that's the goal of them. So if you didn't really realize, this is one of the biggest pieces of inflation is the money supply, because think of it, the more money that's out there, the more we have in our pockets to spend, driving up the prices of commodities. So that's the goal of what the Fed's trying to do. So let's get over to what the MBS market is doing today. Some other markets are closed, 209 points. When I looked at this a little bit ago, it was up about 120. Now we're up 200. I can honestly say in my 34 years doing this, I've never ever seen this number this high. So the good news, what you're seeing on your screen is the mortgage-backed security bond that's trading on Wall Street. The bond has an inverse relationship with mortgage rates. So let's look at it this way. If this number is going up, the prices are going up. Well, the inverse relationship means mortgage rates or yields are coming down. This is a huge move. Huge. Okay, what it's going to do is it's going to actually bring rates back down into the 5s, because we should get at least about 0.5 to 0.75% retrieval from these numbers right here. So if we take at least 0.5 to 0.75 off, we're probably looking at about 5.99% rates today. So let's say you're locked in and you're with a lender and you call them up and they're like, sorry, we can't do anything because you're locked in. What do? Well, I got some reprieve for you. Go and check our website, and it is therateupdate.com. Here's what we're going to do for you for free. So what you're going to do is you're going to go to our website, you're going to take that loan estimate, your rate lock that your lender gave you, and you're going to upload it right into here, okay? It's actually referenced as your loan estimate. You're going to click this button, you're going to fill out all this information. The biggest important information here is let me know how you want us to reach you. You know, we don't want to be calling you if you don't want phone call and you want emailed or text or whatever. So let us know how you want contacted. And then all you're going to do is drag and drop your loan estimate in here or your rate lock. What we're going to do is we're going to scan it to over 80 of the country's largest banks and mortgage companies, all right, and find out, can we get you a better rate? Well, let me tell you this. If you lock probably in the last week, we can get you a better rate. If you're with us right now, what we're going to do is reanalyze your loan that we're working on with you and most likely change lenders if we have to, because we can't go back to the current lender we're with and relock you, because once you're locked, you're locked. So let me explain to you guys what I do. My name is Dan Frio. I'm with Allied First Bank, but I've been a mortgage advisor, I'll put it that way, for the past 34 years. I joined Allied First Bank because they were federally chartered, and the biggest piece here is we are a huge mortgage brokerage. Okay, yes, we're a bank, but we act or function as a broker, one of the largest brokers in the country. What we do is we have affiliations and relationships with over 80 of the largest banks and mortgage companies. So what we're going to do is we're going to scan your loan estimate with the products and rates all over the country to make sure we're getting you guys the best rate when you're out there looking to buy your first home, maybe refinance or do debt consolidation. So how do you find us? Again, all you have to do is go to therateupdate.com. Here's my information. I'll get my head out of the way. That's all the ways on how you can reach out to us. One that most people do is right here. They give us a call, 844-775-5626. But how we really like to contact you and talk with you is if you can schedule a meeting right there beside my head. Book a meeting. It's going to pull up our calendar. You can book a one-on-one consultation with me or one of my mortgage people to advise you guys on the best products and terms when you're looking for a mortgage. So that's it for today's events, guys. I hope you find joy in my videos and some entertainment and education. So if you do, please don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post video. You get an alert. God bless, guys. Thanks so much and have a wonderful weekend. Bye-bye.